Hi everyone, good morning and welcome to today's morning report on Tuesday the 22nd of March with me, Rich Perry, market analyst at Handset Markets. Well, the European trading session has got off to a negative start, and that's come with these terrorist attacks or potential terrorist attacks that seem to be taking place throughout Brussels this morning. It's taken on something of a rather safe haven shift in the market sentiment. And we can see that playing out through the Treasury yields, which two-year Treasury yields are lower, and you can see that playing out through the dollar strengthening, and also other currencies such as the yen outperforming. You're seeing gold higher. I'm going to talk through all those charts in a bit, but certainly the events going on in Brussels this morning are certainly not positive for markets, and sort of not positive for anything really. So. That's why you're seeing the safe haven shift in sentiment there, just developing through the markets this morning. Now, aside from that, we haven't had a great deal of steer from the US markets. We're looking pretty much towards the data today, or we were certainly prior to this these terrorist attacks taking place. And the data today is quite significant actually. There's a fair bit of Eurozone data. You've got But starting off with UK inflation really at 9:30 now. UK inflation is forecast to come in again, creeping higher on the headline data to 0.4%. So that would be a fourth month straight in a row of creeping higher inflation. Although the core data is not expected to pick up from 1.2%. Although if it does, that might give sterling a bit of support. Sterling is a big underperformer today. And then at 10 o'clock, you've got the German ZEW economic sentiment at 10 o'clock, and that's forecast to come in at +5. So that'd be slightly improved from last month's drop back towards zero, although it was slightly higher than 1.0. But still, +5 would be helpful for the German economy, but still, you'd need to see more trend growth there in that German ZEW. And at 2 o'clock this afternoon, we've got the Richmond Fed for the US manufacturing index, and that's forecast to come in at -1.0. But to be honest, I think I think much of this is pretty much sidelined to this terrorism attack that is going on, and that is having an impact across markets. So that sort of takes me to my chart of the day, which is the DAX, and I had started off writing this morning by looking at the DAX being fairly sort of neutral, but the DAX started negatively on the back of this terrorism attacks, and it's fairly much held on though. Interestingly enough, because you look at the daily chart, you've still got this trend higher. Now the momentum indicators are interesting because the stochastics have been falling away. Technically that's not great. You've got a sell signal with a slight bear divergence. It looks to be sort of crossing negatively as well. That's not. I wouldn't be going too negative on the stochastics unless you sort of fall below these sort of March lows here. I think that would be your signal. But at the moment we're seeing a test of this uptrend. Also a test of that 21-day moving average, which having been a basis of resistance quite consistently. If I just highlight that, basis of resistance on the way down several times through December, January, has become the basis of support in March, and again forming the basis of support today. So that's interesting. The reaction low of 97.53 is the key low, and that was Thursday last week. That was in the wake of the Fed actually. So if you saw that Fed low, post-Fed low broken, I think that would be a bit of a signal as well. We haven't had it broken yet. 97.62 was the reaction, and we've actually seen 100 ticks bounce from that. So we've actually seen a pretty decent rally, to be honest. We're only 70 odd ticks down on the day now, having been much worse than that in the early throes from this sort of terrorism attack. I think it's a bit of a knee-jerk reaction. Seems to be a knee-jerk reaction at the moment, unless it obviously sort of turns out to be incredibly dangerous and negative for the whole European security element. It seems as though the markets have initially reacted and then just started to unwind that move. But I think what you do on a technical basis is I'm still looking at this 61.8% fib level. It was providing a basis of support, if you sort of take out that Fed day that still was holding above that, you've now sort of reacted below that, so that I think could be a bit of a pivot potentially today. So around about 9900 is where you'd be looking out for, because that was an old resistance, 9905. So these levels are old sort of old levels, old pivot levels. 9900 is a pretty decent gauge, I think. So you're only 25 ticks away from that on this little rebound now. But it's interesting because that is it is a big key level. I think that 61.8% fib level. So we'll see how that goes. And obviously, with this uptrend coming up towards it now, it gives it a real test in the next sort of day or so. So it is a moving sort of event, this Brussels attack, and it's difficult to know exactly how to play the markets. But obviously, we've had the initial move lower, has unwound, but whether you get a second leg of selling pressure remains to be seen. But at the moment, it's hanging on to that reaction low on the DAX of that 97.53 level. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.